If you've spent any time talking with transmission shop owners lately, you've probably heard the same question being asked over and over again. Where did all the cars go? For an industry that has weathered recessions, supply chain disruptions, technician shortages, and a global pandemic, the current slowdown feels different. It isn't necessarily dramatic enough to make headlines, yet it's significant enough that nearly everyone is noticing it. The conversations taking place around parts counters, in service advisor offices, and across industry forums all seem to follow a similar theme. Vehicle intake is down. Customers are taking longer to approve repairs. Completed vehicles are sitting on lots waiting to be picked up. Parts vendors are reporting slower sales than they've seen in years. Recently, I spoke with several aftermarket suppliers serving shops throughout the Southeast. More than one reported sales declines approaching 50% compared to what they normally expect this time of year. Shop owners from Georgia, Tennessee, Alabama, Mississippi, and the Carolinas described nearly identical trends. Some are seeing fewer vehicles come through the door. Others are still receiving calls, but finding customers increasingly hesitant to authorize repairs. A few noted something that would have seemed unusual just a few years ago: vehicles remaining on their property for days or even weeks after the work has already been completed, because customers are struggling to come up with the final payment. While every market is unique, the consistency of these reports suggests that something larger is happening. The reality is that our industry is being affected by many of the same economic pressures impacting households across the country. Consumers are facing higher costs everywhere they turn. Groceries cost more. Insurance premiums continue climbing. Housing expenses remain elevated. Utility bills have increased. Even routine vehicle ownership has become substantially more expensive than it was just a few years ago. Families who once had some flexibility in their monthly budgets are now finding themselves making difficult decisions about where every dollar goes. Unfortunately, automotive repairs often become one of those decisions. Most of us have seen it firsthand. A customer comes in with a transmission that is slipping, an engine with a serious internal problem, or a driveline issue that clearly requires immediate attention. The customer understands the vehicle needs to be repaired. They know the problem isn't going away. Yet when they hear the estimate, they ask for more time. They want to think about it. They need to discuss it with a spouse. They want to see if they can make it another month before moving forward. The challenge isn't always that customers don't believe the repair is necessary. In many cases, they simply don't know how they're going to pay for it. Ironically, one of the factors keeping repair shops busy over the long term is also contributing to today's hesitation. New vehicle prices remain near historic highs, making replacement far less attractive than it once was. Many consumers who would have traded vehicles a few years ago are instead trying to keep older vehicles on the road. From an aftermarket perspective, that's generally good news. Older vehicles require maintenance, repairs, and eventually major drivetrain work. The problem is that keeping an aging vehicle operational has become increasingly expensive at the exact same time consumers are feeling pressure from every other direction. The result is a customer who knows they need the repair, but waits as long as possible before making the decision. Instead of addressing problems proactively, many are postponing repairs until the vehicle becomes completely unusable. Shop owners across multiple online industry forums have noted seeing more vehicles arrive on tow trucks rather than driving in under their own power. Others report that customers are authorizing only the minimum repairs necessary to get back on the road, postponing recommended maintenance that might prevent future failures. Economic uncertainty has only added to the hesitation. Whether customers are following headlines about inflation, interest rates, international conflicts, or concerns about the job market, many are becoming more cautious with their spending. Even people who are financially stable tend to become conservative when uncertainty increases. They delay purchases, they postpone projects, they avoid major expenditures unless absolutely necessary. That mindset eventually finds its way into our service bays. Global events also continue to affect the automotive industry in ways many consumers never see. Ongoing geopolitical tensions have created concerns about energy markets, shipping routes, and raw material availability. While the severe supply chain disruptions experienced during the pandemic have largely improved, the industry remains far more sensitive to global events than it was a decade ago. Vendors continue monitoring inventory levels closely. Manufacturers remain cautious about production forecasts. Many distributors have chosen to carry larger inventories than normal to protect themselves against future disruptions, tying up significant amounts of capital in the process. For parts suppliers, slower repair activity creates challenges of its own. When shops become cautious with spending, vendors feel the effects almost immediately. Reduced repair approvals mean fewer parts orders. Slower vehicle turnover means slower cash flow. Inventory that would normally move quickly begins sitting on shelves longer. Several suppliers I spoke with described a domino effect moving through the industry, beginning with consumer spending habits and eventually impacting everyone from local repair facilities to national distribution networks. Despite these challenges, one encouraging theme continues to emerge from conversations with successful shop owners. Most are not sitting back and waiting for conditions to improve. They are adapting. Many shops are placing a renewed emphasis on customer education. Rather than simply presenting an estimate, service advisors are spending more time explaining the consequences of delaying repairs and helping customers understand the long-term value of addressing problems before they become catastrophic failures. Financing options have become more important than ever. Shops offering multiple payment solutions often report higher approval rates than those relying solely on traditional payment methods. Others are focusing heavily on preventative maintenance inspections, identifying issues earlier and helping customers spread repair costs over time rather than facing a single large expense. Marketing strategies are evolving as well. The shops finding the most success aren't necessarily competing on price. Instead, they're emphasizing trust, expertise, warranty coverage, and long-term reliability. Consumers may be more cautious about spending money, but they still want confidence that when they do spend it, they're making the right decision. Shops that have built strong reputations within their communities often find that trust becomes even more valuable during uncertain economic periods. History suggests that our industry has always found ways to adapt. The automotive repair business survived the recession of 2008. It survived unprecedented part shortages during the pandemic. It continues to navigate technician shortages and rapidly changing vehicle technology. The current slowdown presents its own unique challenges, but it doesn't change the fundamental reality that Americans depend on their vehicles every day. Cars will continue to age, components will continue to wear out, transmissions will continue to fail. Perhaps the question isn't really where the cars went. Perhaps the better question is how our industry continues evolving to meet customers where they are today. The shops that answer that question successfully will likely be the ones still thriving long after this slowdown becomes another chapter in the industry's history.